SMCI Supermicrocomputer reported their latest earnings report yesterday. Stock is currently down 15%, Nvidia is down 5%, AMD also reported yesterday down 9% right now. We covered that on the channel. So what exactly has happened? Why is there such a weakness pressure now on semiconductor stocks? I do believe, and that's just my opinion, I think there's just pressure on the overall market right now with interest rates expected to be maybe higher for longer, less cuts this year, inflation is stickier. Jerome Powell is about to speak at the time of making this video. He's speaking, I think, in an hour or so. So yes, there's a lot you have to take into consideration. But purely when you look at investments, when you look at stocks, you have to look at the business. You have to look at the company you want to buy. And so right now, if we look at Supermicrocomputer, market cap $42.5 billion. Forward PE now has come down to around 24.3 times. Yes, it is higher than the 5-year mean. Yes, if you look at all of those metrics here, it is higher than the 5-year mean. But the most important part, in my opinion here, just so you get a full picture, if you look at price earnings to growth, it sits at 0.48. Meaning there is quite a lot of growth ahead. If we currently look at the average analyst price target, it still sits at $964, representing around 32% upside from the price we're at today. Now, if we look at what the analysts are expecting for the coming fiscal years with regards to growth, I mean, it's pretty clear that they all see huge growth continuing, not just for fiscal year 2024, where growth is triple digits year over year. Fiscal year 25, top line growth 47% year over year, bottom line 28%, and then in fiscal year 2026, top line growth slowing down quite dramatically to only 6.7% year over year, but EPS still growing close to 20%. Now, if you just look at the headlines, you see that, oh, they missed estimates, right? But in my opinion, when you're going to look at the numbers, you're going to laugh at those headlines. Before jumping into that, if you enjoy this type of videos, give it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, if we look at the Q3, this is fiscal year 2024 Q3, by the way, you can see that the revenue increased 200% year over year, up 5% quarter over quarter. Now, as we've been talking about SMCI and Dell for quite a while, HPQ as well, I mean, this is not a high margin business. Gross margin non-GAAP, 15.6%. Yes, it's up 10 basis points quarter over quarter, but down 210 basis points year over year. They say it's because they want to take more and more market share, so they're okay taking that short-term hit. As for earnings per share, non-GAAP came in at $6.65, up $5.02 year over year and $1.06 quarter over quarter. Cash flow from operations, that is now negative. The reason is they took inventory in pretty late in the quarter, so of course they couldn't ship it. And so that's what you're going to see in Q4, Q1 of fiscal year 25 and onwards. With regards to the trajectory of non-GAAP gross margin, I mean, you can clearly see that, yes, they are pretty much taking a hit in order to gain a market share in now these times where there is a lot of hype, there's a lot of momentum for their products. Let's see if in the future they can regain some percentage points. As for operating expenses and margin, they say here operating expenses increased due to higher compensation expenses and operating margin stable on higher expenses and revenue, so that's quite fine. Non-GAAP EPS continues to grow, that's what you would expect. Cash flow and net cash, as I said, it has come down. Of course, they also raised money, right? Last quarter, in my opinion, quite a good opportunity to do that when the stock is extremely high. And so revenue and EPS outlook for the next quarter and for full year. So for Q4, they expect revenue between $5.1 and $5.5 billion. For the full year, between $14.7 to $15.1 billion. I'll go over a couple of analyst notes. One analyst specifically thinks that revenue will come in a bit higher than that. With regards to EPS, non-GAAP between $7.62 to $8.42. Full year non-GAAP $23.29 to $24.09. Going over a couple of comments that were mentioned during the earnings call. So they talk here a bit about their AI portfolio. They are now strongly focused on developing new generative AI and inference optimized systems based on the upcoming next generation NVIDIA H200, B100, B200, GH200 and GB200 GPUs, as well as Intel's Gaudi 2 and 3, and AMD's equivalent. Most of them support both air cooling and DLC cooling. With regards to DLC, there is some supply chain issue there, but they say they do see some improvements in the coming quarters. They continue by saying here, at this moment we are focusing on delivering more than 1000 racks of NVIDIA's HGX AI supercomputers. Each rack supports 64-piece H100, H200 or B200 GPUs with the latest DLC liquid cooling technology to 3 industry-leading customers from April to June of this quarter. One analyst did ask, not really specific guidance, but somehow yes, for fiscal year 2025 or the September-December quarter. Like I said, this was Q3. We're now already in Q4 of fiscal year 2024. But any source of high-level kind of color you can provide just to think about how to model the September, December, and also the fiscal year 2025. They basically say here, we will have strong growth, and I believe this strong growth will continue for many quarters to come, if not many years. I believe it will be many years. Of course, he probably has to say that. Then with regards to some analyst comments, so we've got one here from KeyBank Capital Markets, reiterates its sector weight rating on Supermicro. Out of Supermicro's current 5K per month rack scale plug-and-play full IT solution capacity, the company updated that it has capacity to ship 2,000 of such with direct liquid cooling. Of this capacity, the company highlighted it will ship more than 1,000 of these rack-scale DLC solutions to 3 customers in Q4 fiscal year 2024 at high-end configurations, including each rack supporting, like we said before, so I'm not repeating that again and again, fully loaded, these configurations would amount to more than $2 million per rack. Moving on to a concern by an analyst at JP Morgan with regards to gross margin and the need for capital raises have concerned investors. The analyst still has an overweight rating and a price target of $1,150. Again, capital raises when the stock is at all-time highs, in my opinion, is the good move. Then last one here with regards to an analyst at Barclays. He finds this outlook could be conservative as he thinks the company could hit $6 billion in revenue. Additionally, the September quarter should grow by 5% quarter over quarter with a much bigger sequential ramp for December quarter, aided by incremental order wins from sovereign AI and some green shoots around share gains for leading hyperscale customers. As a result, Wang increased his price target on Supermicro to $1,000 from $961. And so if we look at the stock right now, we're basically in the middle between the 200 and the 50-day moving average. The 200 sits at $560. RSI sits at $53. Yes, the downtrend is quite clear. We're actually down, I will tell you exactly right now, since the highs back in early March, we're now down around 40%. So of course, right now, it makes maybe a bit more sense to be bullish on this stock since it has retraced 40%. Valuation-wise, it's a bit better as well. Plus, you're getting even more information now thanks to the latest earnings call and earnings report. So yeah, do with that what you want. Of course, the overall sentiment in the market right now, the whole focus is basically on how many rate cuts are we going to get? Are we even going to get any rate cuts this year? So yeah, I think there is opportunity for long-term investors, whether or not you want to invest in this type of business, low margins, right? Yes, it is cyclical, but I do think that you can find some upside, especially in the coming quarters, maybe in the coming years as well, because I do still think that the AI revolution is just starting. You have countries investing billions and billions in that, and a company like Supermicro, like Dell, is definitely going to gain from that. There's plenty of other opportunities out there, plenty of other semiconductor companies that have taken a hit that I do think that they are at the start of their own cycle, Micron being another one. So yeah, that's just my opinion. Of course, do leave your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.